Hello everybody, welcome to Broker Junction's webinar presentation dated February 24, 2017. It is 1:41 p.m. My name is Armin Fatih. I'm a senior trader here at Broker Junction, and today I will be talking to you about our trading platform called the ID Trader, and specifically about its copy function. In essence, the functionality that allows you to copy my trades into your own account. Okay, let me get started here. Number one, as you can see, we are Broker Junction Series L.L.C. We are located in the financial district of Manhattan in New York City. We've been CFTC registered since 2005. You see our contact details here as well. Please note there is a risk of loss in Forex futures and options trading. Past performance is not indicative of future results. Okay, here, this is the ID Trader. You're seeing a screen that's showing you a few charts, and it's showing you a quotes window with the most favorite currency pairs that I like to observe. As I said earlier, this is a webinar that's going to focus on showing you the copy trade function of the ID Trader. Believe you me when I tell you that this is a trading platform that basically allows you to execute trades like any other trading platform that you know. You can buy a currency pair, you can sell a currency pair, and you can open up charts. But here, right here, we have a feature that I want to talk to you about today, and it's this copy button here that you see that I'm highlighting here with the red marker. So what is copy trading all about? Copy trading. The idea with copy trading is that you open up a self-directed account, you fund your account with your money, and then you copy the trades of another person's self-directed account. In this case, that self-directed account holder is me. My name is Armin Fatih. As you can see it here, I'm a licensed industry professional, which is nothing other than another way of telling you that I'm CFTC registered. First time I got registered was in the year 2000. Anyway, I'm trading here my own live account. This is not a demo account. This is not a practice account. I started trading this account 465 days ago, and as of today, I am up 40% and 0.5, I should say, 40.5% I'm up as of today. Maximum drawdown in this 465-day period was 7.59%. Right now, in this moment, one account is copying me only, I should say. That account is copying me with $5,000. As you can see, I started 465 days ago with a starting balance of $10,000. That's twice as much as the account is funded with, which is copying me right now. Also, what you can see here is the chart, a graphical illustration of my past performance in these 465 days. The next thing that I like to point out are these two ratios, Sortino ratio and Sharpe ratio. Both of them allow you to evaluate what kind of risk I have applied in the past, or should I say so far. I leave it up to you to Google the Sortino ratio and the Sharpe ratios, meaning why? Because if I start talking about it, then you might think that I am biased. So I don't want to sweet talk anything. I'll leave it up to you to objectively find out what a Sortino ratio of 1.12 and a Sharpe ratio of 1.91 implies. Okay, here, this is the most important button, copy, as you can see here. I'm going to press it now, and another window will open. This window will again show the basic information that we saw before already, only arranged in a different format. Again, here you can see the performance data of my account, which I opened up 465 days ago. Okay, let's assume that you are interested in copying me because you liked my past performance. Let's assume that for a minute. In that case, I would like for you to select automatic. I'm going to highlight it here in red, so you give me a fair chance for 4 to 6 weeks to show you how I actually trade. And then I'd like you to also select the top selection up here, which says all traders' orders be entered as market orders. In doing so, you'll never miss a trade. Down here we see $1,000. This is where you can allocate how much of your account in dollars should be used to copy somebody. In this case it is set on 1,000, so that means by default, if anybody was looking to copy me, by default they would copy me with $1,000. Let's change that for a second so you can see that it's changeable. Well, actually, let me go down here first. Also, you see the number 1 here. That's the lot size multiplier. This is where we adjust the risk up and down by moving this lever to the left or to the right. Okay, let me get into it so you'll see. Here, first of all, we're checking automatic, and then we take the first selection, which means all trader orders be entered as market orders. Now we go down here and we're going to change this 1 to a 5, so you can see that you can change it. So in this case, somebody that funded their account with $5,000, total, let's say, would be copying me with the entire $5,000. That person could also say, no, I just want to copy the senior trader with only $3,000, and the other $2,000 I'm going to keep to copy somebody else's trades or possibly trade on my own. And here is that multiplier. Let's say somebody is copying me and they have $5,000 in their account, and they know that I started trading with $10,000, like I pointed out in the beginning. So they figure that it makes sense to lower the risk. In order to do so, they take the lot size multiplier down. Look at that 1, which was blue a second ago. Now it's 0.50, or should I say half, 0.25, and 0.10. So that we are able to minimize the risk all the way down to 1/10 of the risk that the person that we are copying has taken on. Let's say somebody has $20,000 in their account and they want to apply more risk. All they have to do is move the lever to the side, and as you can see, there's a multiplier of 5 here now, and here a multiplier of 2, goes all the way up to 100 as a multiplier. Having said that, in the US, the leverage is limited to 1 to 50, so don't be surprised if you try to apply too much leverage and your order is rejected. In case that happens, it's because of this regulation that we have in the US. Briefly, I want to talk about this. I want to confirm all orders. This allows you to, on a one-by-one, case-by-case, trade-by-trade basis, determine if you want to copy my trades or not. If you select this window, every time that I try to place an order, a window pops up in the lower left, in the upper left of your screen, and it'll tell you what I'm about to do. And if you act swiftly, then you can decide for yourself if it makes sense to copy me or not. I said act swiftly. Obviously, the market might come back to the same level again, and you can still copy me then. However, maybe the set of circumstances is different. Therefore, it is better for you. No, in order to copy me, it makes probably more sense to decide quickly if you want to copy a trade or not. If you select this, I want to confirm all orders function. Now, if you were to click that button, I'm going to highlight this here again. If you were to click copy, you would be copying me now. Let's bring down the leverage a little bit. Let's bring it down to 1. Now that I showed you how it works. Okay. Now, let's say somebody would click this copy button. If they would do that, if you were to click this copy button, which I can't because the system doesn't allow me to copy myself, then over here where it reads copy, you see the red spot here, it would read stop copying. And this brings me to my next topic. What is different about a self-directed account versus a managed account? In a managed account, you grant somebody limited power of attorney so they can trade on your behalf. In a self-directed account, you are responsible yourself. You're not giving the power of attorney to trade on your behalf to anybody. The full responsibility of all trading activity taking place in your account lies with you. That means if you buy something, it's your decision. If you sell something, it's your decision. And also, if you click copy to emulate somebody else's, or should I say to replicate somebody else's trading activity, then that's your decision. And you have to bear responsibility for that. Now, in a managed account, usually you receive an email every day. And let's assume that yesterday your asset manager had a bad day and he caused you to lose $1,000 in total. And this is twice as much as you on a daily basis would actually like to see in losses, if at all. Like I said, that usually happens after the fact. You're having breakfast in the morning, you open up your email and you see the trading actions that took place yesterday with their results. Hopefully they're positive, but if they're not, then that is just what it is. So you suffer the loss. With self-directed accounts, you have a little different approach. Of course, you still get your email statements every day. However, you're able to log in and you're able to see how your account is faring at any point in time. So you would see the same screen and you could click on positions here in the top. A window would open and it would show you that you're down, let's say, $500. And now, because we said earlier 500 is all that you are looking to face when it comes to losses on a daily basis, you would be able to click this stop copy button if there was a trade in your positions window that was losing and you didn't like it. However, once you stop copying somebody, you also have to go, let's say that loss would be in a euro over US dollar contract. Let's say you're losing $500 there, you don't like it, you press this dollar button here, like I'm going to do it real quick, and a ticket would open up. You would see that I bought the euro, and you would want to offset that trade on your own. In that case, you would go up here, you would select 1, assuming that I bought 1. So you would select the same exact number of lots, or should I say contracts, and then since I bought, you would have to change to sell, and you would sell. Now, since I'm talking about this ticket here, don't forget the only type of order that is guaranteed to always get filled is the market order. Every other order type that you see here is not guaranteed to be filled. But that's not what I'm here to talk about today. Like I said, today I'm just going to talk about the copy trading to you. So you have the power to instantly interfere because you have the screen, and every 15 minutes, let's say you are at home, or maybe you're at work, you're an architect, but every 10 minutes you look over to the left and you kind of like to keep control over your account, and you are able to do that because you can see this very screen here at any point in time. And not just that you can see the screen, without having to call the asset manager, without having to justify your decision to close the account or anything like that, you would just offset that trade that you didn't like yourself, and you would stop copying, in this case, my trades as a senior trader. So you have the power to instantly interfere. Instant interference. That's the big advantage that you have when you use copy trading as a possibly modern way to invest. Okay, I think this is it. This covers everything that I wanted to talk to you about. Should you have any questions, please contact us. You can give us a call. You can see the phone number here. You can send us an email. You can also visit our website to get in touch with us. I hope you like what you have seen. I hope you join in to copy my trades. One of our next presentations will show you the cost of copy trading, and another presentation that you will also be able to see will deal with our history and background. So don't forget, there is a risk of loss in Forex futures and options trading. Past performance is not indicative of future results. This was a recorded presentation on copy trading. We taped it on February 24th, 2017. Have a nice day.